Nobody should be surprised by this very last decision of the Russian government. We need to be prepared for a total cut of gas supply from Russia.
The European Union has to react to the Putin's challenge as we did 2 years ago on pandemic. And I think we succeeded 2 years ago. We have to succeed today too.
If we want to be consistent with the policy of sanctions, there is a need to cap the oil price. Seems to me to be the right direction.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Europe weighs crisis measures after Russia shuts the Nord Stream pipeline indefinitely. Gas prices surge again. Risk reversal. The euro slumps to a 20-year low. European stocks plunge as the energy crisis compounds inflation fears. Plus, Britain in the balance. Liz Truss looks set to win the Tory leadership race to succeed Boris Johnson and become the UK's next Prime Minister. So it is quite a busy day, very busy day. I know volumes could be a little bit thinner than usual because it is a bank holiday in the US, so a lot of cash equities and treasuries are closed. The one thing, though, we need to look at is, of course, the energy prices going up some 35% and what that does to European stocks, down 1.7% overall. The DAX down 3%. Euro dollar, check this out, 99.09. It's at a 20-year low. Again, how much lower can euro go? Quite a lot if you look at some of the technical analysis by some of the banks. Now, European natural gas futures, you can see gaining 28%. Earlier, they were actually gaining up 35%. Let's also go to the European map because it really is the DAX, because of the proximity to Nord Stream, that will have a bigger, much bigger impact to what we saw because of Nord Stream 2. We saw that picture of the gas leak by Gazprom, the DAX down 3% lower. The UK also big here day because at 12:30 p.m. UK time, we know who the next Prime Minister is. They'll have a lot of concerns on the economy, a low pound, but also possible zombie companies that they need to deal with. Now, Europe's energy crisis is deepening. Hours after G7 leaders agreed to implement a price cap on Russian oil, Gazprom also reversed plans to resume gas flows through the Nord Stream pipeline. Now, it's also led to Germany, the country most affected by the Nord Stream cutoff, announcing a package over the weekend to protect consumers from soaring costs. Now, one of the steps that Scholz may take is tapping windfall profits generated by energy companies.
And we will make sure that no such excessive profits can continue to be used by skimming them off in a way, as in the case with the EEG levy, only in reverse. And we will use the many billions that we raise in the process to relieve the burden on citizens with an electricity price break that helps ensure that citizens can also use a basic supply of electricity at cheaper prices.
Now, for more, we're joined by our Berlin bureau chief, Birgit Jennen. Birgit, how prepared is Germany for this?
Well, I mean, one has to keep in mind that really this is a scenario Germany wanted to prevent all day long since the war started, that a full cut of gas is not going to happen. This is what Germany has prevented as a sanction mechanism. So therefore, I mean, it is certainly a very difficult situation. What the government has so far presented are kind of compensation measures for the consumers so that really the public unrest is not going to unravel in the middle of this crisis. So there are some measures which help, for example, students, households, families with children and low-income earners. And then what we just have heard, also there is the price cap on electricity and financed by kind of an instrument to use kind of excess profit from rising energy to finance part of these measures.
Sir Birgit, what happens next? How much support can the German government actually give to businesses and households to get through this?
Well, the support given so far is probably going to last for at least until the winter. But really, I mean, what we are hearing is that really industry is really a little bit frustrated with the government proposal, because if you really look closely at the blueprint from yesterday, there isn't much in there for industry at the moment. I mean, we have seen that Uniper really needed an aid package of already 15 billion, and we do hear that Other companies are equally suffering, and it's also totally unclear as to whether it's enough for Uniper. But so far, the government hasn't given any indication of what is going to do in terms of helping industry getting through the crisis. So this is certainly something we have to be watching over the couple of next weeks.
Birgit, thanks so much. Birgit Jennen there, our Berlin bureau chief. Now, we're also joined to talk about the markets, Willem de Wilder. He is chief economist at BNP Paribas, and Christina Kino, our markets editor. So thank you both for joining us. Christine, let's just start with you. And if you look at what the market is worried about is, of course, energy prices. Is now the worst priced in because we have this cutoff and we're expecting it not to come back online? Or could energy prices go even higher?
Well, Francine, I think now is kind of just the market digesting through the immediate news, right? But I think there is potential for this to go either way, really, depending on the sort of response that we're going to be seeing from European governments moving forward. I mean, I think, you know, on the topic of silver linings, which I know you're very keen to hear about, that is one silver lining is the fact that Germany is now kind of implementing these new measures, right, to support the economy, because that is ultimately what would help kind of mitigate some of the just the many problems that Europe has, whether it's on the energy crisis side of things or on the inflation side of things. It'd be a big help to both households, the ECB, and markets in general if we do see these moving forward.
Yeah, and Willem, I mean, we're trying to really, William, and figure out exactly what the next 6 months will bring, right? It's the first week in September. How much should we worry about the European economy? Is there anything that could cushion the blow?
Well, the only positive thing I would mention is that we still have the investments of Next Generation EU. So that is still happening in the background. For the rest, it's all limiting the damage. We have another stagflationary shock now. And we have, in addition, the interest rate tightening by the central bank. And what is also striking to observe is that new order flow at companies is declining as well. And it means that I think what we're underestimated, echoing with what is said earlier by your Berlin colleague, is that what is the impact going to be in a lasting way on companies? And there I'm very concerned.
What does that mean, William? Very concerned. Is it how many companies, what percentage of companies could actually go under? Is it zombie companies because of interest rates rising, or that they just can't pay energy prices?
Well, I'm not able to put a number on it, but you know where the sensitivities are. Clearly, you have one, the interest rate shock, and then you have the energy sensitivity, the energy shock. But what is important, however, is that we have an impact in terms of the cost base going up because of energy. We have wages which are increasing, and okay, one understands why that is the case. And then on top of that, demand is softening, demand indicators. Now, the thing that is striking most, if you look at the survey data, is that for the time being, hiring intentions of companies remain elevated. And the concern that you can have for the winter is that finally that will also start to go down. What that means is that it will give another knock at consumer confidence.
Christine, what does this mean for euro? First of all, I mean, euro at a 20-year low, and it could go even lower.
Absolutely, Francine. I mean, I think, you know, even when it hit below parity over the summer, right, like there was already this talk that it could go much, much lower than this. And I think it really is clear the direction of travel for the euro at the moment is even lower. It almost seems like the level right now is not as relevant as that broad direction. And, you know, this is what we're seeing now, right? I mean, we're what, a 99-cent handle at the moment, which was really kind of unthinkable maybe even like 6 months ago, but here we are. And I think that is that downward pressure continuing until we see some kind of a situation where there's enough bad news that it turns into good news. And again, by that I mean when governments step in and provide that fiscal support, like that is I think what investors and just people in general are kind of waiting for at the moment.
Yeah, and Willem, I guess this goes back to, you know, if you look at the world economy, what's the possibility of a recession there globally?
Well, you have U.S. that is clearly showing signs of starting to be hit by the rate hikes. You see that in the residential construction markets. The survey data are still holding up well, but they have to come down. That is also, by the way, what central banks is after, what the Fed is after. Europe we discussed. China is very soft, maybe a bit better in the remainder of the year following policy efforts, but otherwise it's very soft. And then you look more broadly speaking at developing economies. They, of course, are suffering from the hit of slower demand with the major trading partners. Let's not forget that new export orders across the globe have been on a declining path, if you look at the PMI data, for several months. So what you have is that it is a generalized slowdown, and you do not really see in the very near term where the silver lining is coming from.
I mean, the silver lining, Christine, is one thing. The worst lining, I guess, is for Germany, right? So how much, and again, what's the base case for any investor right now invested in Germany? How long does it take to go through second round and third round effects?
Well, yeah, that is the big question, Francine, isn't it? If I knew, or if investors knew at this point,
we'd be rich.
Exactly. We would be rich and very relaxed. But alas, that is not the case. And that is a very good question moving forward. It really is going to be all about timing again, right? Because, it does take a while for the second round, third round effects to feed through. And then at that point, who knows where we will be in terms of monetary policy as well. There are really a lot of factors that are playing into this at the moment. But it seems like at the moment, the investor thinking is the path of least resistance is weaker, whether it's equities, whether it's the euro, whether it's European credit at the moment. We are definitely seeing at the start of this week a sort of sell first and ask questions later sort of mood. And so if there's something that kind of comes in and puts a floor under that, it remains to be seen what is that exactly. But that's sort of the feeling that we need at the moment. Is this something will have to come in to kind of really just kind of put a stop to the weakness that we're seeing starting off the week.
Christine, thank you so much. Christine Aquino there from our markets team, and William de Vilder, chief economist at BNP Paribas, stays with us. Coming up, the race to become the next UK Prime Minister nears the finish line. We take a look at the many challenges facing whoever takes up residence in Downing Street. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, Britain will have a new Prime Minister tomorrow. Either Foreign Secretary Liz Truss or the former Chancellor Rishi Sunak will be named as the next Conservative Party leader at lunchtime today. Well, we're back with William de Vilder. He's chief economist at BNP Paribas. William, first of all, when you look at the UK with all the compounded concerns over inflation, tight labor market, how worried are you that all the problems in the world, maybe apart from Germany, are compounded on this island?
Yeah, it looks like a combination of how many things can you put in your plate. So to state the obvious, there's just an awful thing that needs to be done. And I think the first thing is that you avoid that the economy will suffer in a longer lasting way of the shocks that it has been experiencing. The thing I'm most concerned about is the distribution consequences. You have a major inflation shock, and it has, of course, a disproportionate impact on the lower income and of the income spectrum. So that you need to work on. The other point is that if energy prices remain high for a long time, which is, I think, a sensible assumption to make, what does it do to companies? What does it do to company profitability? Within the European Union, some factories have already decided to shut down operations, like producing bottles, etc., simply because energy prices, gas prices are too expensive. So let's say that the policy focusing on the avoiding the longer lasting hit is also very important, and of course public finances.
So, William, what does that mean in terms of some of the campaign promises to the Conservative members that Liz Truss has promised? And if you look at the bookmakers, they think she will be the next Prime Minister. How much of those promises can she actually stick to?
Well, you have a campaign, and then once you're behind the steering wheel, you may need to adapt your emphasis. That is not unique to the UK. You see that in about every country where there has been a political campaign. The reality is that you have a country which has a massive challenge with respect to inflation. Okay, leave that to the Bank of England, and it will do the necessary. But that is also going to mean, of course, that on top of the supply shock, you also have tight monetary policy, so it makes the demand and activity environment even more difficult. Hence, you need to do something to support, and then accept, I think, that public finances would bear the brunt in the short run. But in the medium run, you will have to do that. You have to do something and rein in the deficits. Otherwise, you end up with a situation that borrowing requirements are structurally higher than in other countries, and that your currency would also be structurally weaker.
William, what does that mean for pound? How much lower can pound be, and how much is that problematic for the Bank of England, if it is?
I think you have a combination of pure British factors with respect to the pound, and then you have the global environment, of course. I think what's important in countries in currencies, that have been weakening significantly is that at some point the rubber band metaphor applies. That is that there's a lot of energy because you have been pulling that rubber band, and then all of a sudden, or not all of a sudden, but at some point, there is some good news. Good news could, for instance, be that when inflation firmly starts to roll over, the good news could be that you see that sentiment indicators start to bottom. I think that is a bit early, but these are the things that you have to look at, because then, of course, you will have big short covering because people will say, I've made enough money there and now it's getting a bit too risky. Same line of thinking, by the way, applies to the euro dollar and to dollar yen, even riskier in my view.
All right, William, thanks so much. William de Vilder, their chief economist at BNP Paribas, with some great insight into the UK. Now, coming up, the French finance minister, Bruno Le Maire, didn't find Nord Stream shutting to be a surprise. More from him next. This is Bloomberg.
It's not a surprise. Nobody should be surprised by this very last decision of the Russian government. We need to be prepared for a total cut of gas supply from Russia. I think it will be a challenge. Let's be very clear. It might take time, but explaining to all the 27 member states that if we want to be consistent with the policy of sanctions, there is a need to cap the oil price, seems to me to be the right direction.
Well, the French finance minister, Bruno Le Maire, they're speaking to Bloomberg on Europe's looming energy crisis, and that was at the weekend at the Ambrosetti Forum in Italy. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. EU ministers are set to discuss special measures to rein in surging energy costs, including gas price caps and a suspension of power derivatives trading. They'll be considered at a meeting of energy ministers on Friday. Russia's failure to reopen the Nord Stream pipeline over the weekend after maintenance is bringing renewed urgency to the debate. Germany, meanwhile, has unveiled a $65 billion package to support consumers. China has extended its lockdown for most of Chengdu's 21 million residents, with all indoor entertainment venues, schools and dine-in restaurants remaining closed. All of the country's 31 mainland provinces recorded at least one local COVID case over the past 10 days, reflecting the broadest outbreak since at least February 2021, when disclosures first started. Voters in Chile have rejected a new constitution that prioritized social rights and the environment, dealing a blow to a 3-year campaign to temper free market policies. With almost all ballots counted, 62% rejected the plans, which opponents argued would hurt growth and development. The US climate envoy, John Kerry, says Russia's president has weaponized fuel by restricting energy supplies to Europe. Speaking exclusively to Bloomberg in Hanoi, the former Secretary of State also told us about the prospects for re-engaging with China in the fight against global warming.
I remain hopeful that they did say they would suspend. That means that it could open at any given time. My hope is that President Xi will recognize the benefit of getting both of us moving in the same direction, leading to Sharm el-Sheikh. The world needs a positive message.
Vistry Group has agreed to buy Countryside Partnerships in a deal that values the embattled UK home builder at around £1.25 billion. The cash and share deal has been recommended by the boards of both companies and comes at a premium of about 9% on Friday's closing price. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Coming up, the race to become the next UK Prime Minister nears the finishing line. We take a look at the many challenges facing whoever takes up residence in Downing Street. If you look at UK markets, the focus firmly actually on energy prices. So maybe as Europe scrambles to respond to a gas surge by 35%, there's a bit of a reprieve when it comes to the FTSE 100, down some 1.2%. The focus, of course, is also on pound. Currencies full steam ahead, the euro sliding, policymakers now grappling on how to curb demand dramatically. This is Bloomberg. Energy emergency. Europe weighs crisis measures after Russia shuts the Nord Stream pipeline indefinitely. Gas prices surge again. Risk reversal. The euro slumps to a 20-year low and European stocks plunge as the energy crisis compounds inflation fears. Plus, Britain in the balance. Liz Truss looks set to win the Tory leadership race to succeed Boris Johnson and become the UK's next Prime Minister. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's check in on the markets. And, of course, the main story, apart from UK politics, is what we're seeing in energy prices across the board. Europe racing to stave off energy catastrophe this winter that's threatening to turn into an economic and financial crisis, too, because of the proximity, of course, of Germany and the reliance on Nord Stream. You can see the DAX down 3%. European natural gas futures up 30%. Sweden, actually, Finland creating this emergency backstop at the weekend to help utilities struggling with collateral requirements. Now, Britain will also have a new Prime Minister tomorrow, but we find out who it is today. Either the Foreign Secretary Liz Truss or former Chancellor Rishi Sunak will be named as the next Conservative Party leader at lunchtime today. Well, joining us now from Downing Street is Bloomberg's Lizzie Burden. So, Lizzie, first of all, is it definitely Liz Truss?
Never say definite in British politics, Francine, after all the commotion, the surprises we've had over the past few years, but all the polls would indicate that it's most likely to be Liz Truss, and if it is, she'd be the third female Prime Minister in British history. Either way, it will be the fourth Prime Minister in 6 years in the UK, just showing how tumultuous a time it has been, and they're going to inherit an economic crisis, the likes of which we haven't seen since the early 1970s. You've got inflation in double digits, workers striking across sectors, and the BOE seeing a recession on the way. So it's a very, very forbidding in tray, whoever is the next leader. But let's not write off Rishi Sunak until 12:30. That's when the result comes.
Okay, let's not. You're right, Lizzie. Let's not do that. So let's see how the market takes whoever becomes, of course, the next Prime Minister. So talk us about the pageantry, and this is what the Brits do so well. What happens after 12:30 today?
Well, tomorrow, both Boris Johnson, outgoing Prime Minister, and whoever is the next leader, as I say, it's likely to be Liz Truss, will head to Balmoral. That's the Queen's Scotland residence. Needs must at this moment. It is a break with tradition, but given the Queen's mobility issues, they're going to go to her in Scotland and then hand over power. Truss will then come back and make a speech here at Downing Street. Again, a break with tradition. It might actually be from inside that famous black door this time. And then on Wednesday, she would meet with her new cabinet, discuss her plans for how to deal with this cost of living crisis that the UK finds itself in, before heading to Prime Minister's questions in the House of Commons. But really, once she's in, the challenge is going to be staying there, because there's going to be a general election by the latest January 2025, and appealing to the general public's a very, very different beast to the narrow 160,000 or so Tory party members that she's had to try to win the votes of so far.
All right, Lizzie Burden on Liz Truss. We can take a bet, Lizzie, on how many times you're going to be called Liz instead of Lizzie. Talk to me a little bit about, the main challenges. I mean, they're huge challenges. How many promises can Liz Truss actually keep?
Well, we have a report on the terminal today about even some of Truss's closest supporters doubting whether the tax cuts, the increases in defence spending, the subsidies to energy that Liz Truss is said to want to offer can add up. and whether they'll actually be enough, and whether she'll actually have to U-turn very soon into taking the premiership, which would undermine her authority. And it's not just her closest supporters, it's also the markets. You've seen the moves in the pound since Boris Johnson resigned earlier in the summer. It's been a brutal contest since then, and it isn't exactly clear what the fiscal policies will be. But remember, we had Charlie Bean, the former Deputy BOE Governor, on this programme warning about a crisis in gilts and sterling. Even if Truss manages to win over the Tory party membership, he said that it's the markets that will punish bad policies, if indeed they are. And she said that she will focus on tax cuts instead of handouts. She said that she wants to take on the economic orthodoxy at the Treasury and the Bank of England. She blames the BOE for inflation, and she says she wants to review its mandate. That could undermine the credibility of the institution at a moment when it's trying to fight inflation.
Lizzie, thanks so much. Bloomberg's Lizzie Burden there outside Downing Street. Now we're joined by Catherine Garrett-Cox, Chief Executive Officer of GIB Asset Management. Catherine, great to have you on. It's a pretty busy day, because if you look at exactly what's going on in UK politics, let's assume it's Liz Truss, because that's the kind of mood music not only by the bookmakers but the Sunday papers. What kind of policies can she actually put in place?
Well, I mean, I think you just heard from Lizzie there that clearly one of the things facing whoever steps through the door of number 10 is going to be tackling the energy crisis, but most importantly, the rising cost of living. And I mean, I think, as an aside, the other thing that we've got to remember is we've got to hold firm to our green agenda as a UK. So Boris Johnson made great promises around net zero by 2050. There's a whole squeeze on lots of things at the moment. So I guess the sort of key issue for whoever steps into that role will be, what is the short-term pain versus the long-term gain? And we have to believe that we need to get on this pretty quickly.
But is it possible to cut taxes in this environment with, so much? I mean, you need to worry about the budget deficit.
Well, I mean, I think there are worries about the budget deficit. I mean, clearly, we've got rampant inflation. I mean, basically, we've got a toxic cocktail of things that I don't think anyone could have foreseen in the last 6 to 12 months. So we've clearly got to tackle some of these big issues. Is it tax cuts? How does all of this hang together? And we're clearly going to know, hopefully, within the next week.
Yeah, although, I mean, it's difficult to have a comprehensive plan in the next week. Do they need more time? I mean, even with the Bank of England, I don't know whether it undermines their credibility and what it all means for the markets.
Well, I would hope to think that plans have been shaped for some time, but perhaps not externalised. And I think in some ways the fact that so little of this has really leaked into the market is probably a good thing. But as you say, a week can be a long or a short time in politics, and we're just going to have to wait and see.
What does it mean for markets? So when you look at pound, for example, how much lower does sterling go?
Well, clearly at GIB Asset Management, I mean, what we're really focusing on is sort of markets in general. And from a UK and sterling perspective, I mean, the UK has some challenging headwinds at the moment. I'm not sure that we would necessarily forecast, exactly the sort of low point of sterling. But I think, clearly what we've got to see is support for consumers. I mean, consumers are seriously stretched at the moment. We've got a whole range of different, as I said, headwinds coming together. And support for consumers on the ground, I think, is going to be really what the next PM needs to focus on.
So, Catherine, I mean, this could be actually companies going under because they can't pay energy bills. This could be utility companies going under because consumers aren't paying their energy bills.
Well, I mean, there are so many different consequences, right? Around 9 million households are forecast to move into fuel poverty. I mean, that is, pretty extreme. What are the other consequences of what's happening in the macro environment? From a consumer perspective, we've got the fact that people are holding back on saving for the future. So 1 in 10 adults at the moment is either pausing or halting their pension contributions, which is a pretty scary scenario. So what we've got to consider is, okay, what are people doing now, but what will the longer term implications be of that? And then how does the private sector rally around that with everything that the PM is going to put in place to make sure that we can build a more resilient economy, because surely that benefits everybody. So
as the chief executive of that asset manager, do your clients want to stay invested, or do they want to just cut down and get into something else?
Well, at GIB Asset Management, mainly we're focused on very long-term themes and trends. So our whole ethos is around investing in companies that seek to solve the world's greatest challenges. And let's be honest, we've got a few of those at the moment. So what we're seeing from a client perspective is that really there's a very, I would say, a very sanguine buy and hold type of mentality. Most of our investors are prepared to look through the short-term volatility. And as an
For
investor,
years.
well, for years. And what I would say is that generally speaking, that ends up being a better outcome for all concerned, because trading furiously brings with it transaction costs that are often just going to eat into your financial returns. So, I mean, when you've got galloping inflation, leaving money sitting in the bank, if you have any in cash, I mean, you're just going to see that eroded.
Right.
So,
but they're not saying, actually, I want to go into private equity or I want to go into something else, you know, such as real estate.
I mean, right now, I mean, in terms of what we're seeing across the board, from our perspective, investing in companies that are helping to solve some of these challenges that we see, whether it's addressing the energy crisis, whether it's increasing productivity, you know, tackling the green agenda, and then we've got a whole series of issues around the health theme, right? And again, if you've got an NHS that's at breaking point in the UK, there are a whole lot of things that, you know, we think the corporate sector can bring to bear on tackling these challenges.
All right, thank you so much, Catherine Garrett-Cox, there, the Chief Executive Officer of GIB Asset Management. Now, let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Vistry Group has agreed to buy Countryside Partnerships in a deal that values the embattled UK home builder at around £1.25 billion. The cash and share deal has been recommended by the boards of both companies and comes at a premium of about 9% on Friday's closing price. The UK is among the potential sites for Prologium's $8 billion factory that would build a new generation of EV cells. The Taiwanese solid-state battery startup is looking at options across Europe, the US and Asia. Solid-state batteries promise reduced charging times, longer driving ranges, and unlike conventional lithium-ion batteries, no fire risk. Citigroup has joined rivals in trimming its mortgage workforce as rising interest rates continue to weigh on demand for US housing. A source says the job losses total fewer than 100 positions. The bank originated $7.2 billion in mortgages in the first 6 months of the year, down 15% compared with a year ago. That's the Bloomberg Business Flash. Francine.
Laura, thank you so much. Now, coming up, we have more on Europe's energy crisis as the EU weighs special measures to rein in soaring energy costs. That's next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is a picture for energy stocks. A lot of the focus, of course, is on energy stocks, given what we saw in the last, 3 days. But it was today at the open of gas prices up some 35%. It's putting a lot of pressure on energy. Not on energy prices, but it's putting a lot of pressure on equity stocks because we worry about the second and third round effects. If you look at the actual utilities, the actual energy prices, Uniper down 10%, RWE down 3.7%, but Equinor gaining. Now, the global fuel shortage should encourage governments to embrace renewables in order to combat climate change. That's at least according to the U.S. climate envoy John Kerry, who also urged Europe to divest from its dependency on Russian energy. Well, he spoke to Bloomberg's Haslinda Amin in Hanoi.
Fuel, gas, oil, has been weaponized by President Putin. Now, in war, obviously people go to extremes because of the stakes.
What is the best stopgap measure, you think? Because we know that the U.S. has suggested exporting fossil fuels to fill that gap in Europe. Is that not a contradiction to what you're pursuing, which is clean energy?
It's not, as long as it is temporary, as long as it is accompanied by a huge uptick at the rate and the amount of renewable energy that is being deployed. You say, what is the shorthand, quick take out of this? It is, be as independent as you can in your own energy grid. Get your renewables out there. Begin to wean yourselves from the weapon that is being used against you, which is the dependency on fossil fuel and gas.
The thing is, as a result, even Germany is investing in gas facilities right now.
Yes, they are, but here's the way we at least look at it. There will be gas and oil pumped for some period of time, no matter what. That's cooked in to the rate at which people are now saying we will reduce our emissions. net zero by 2050. You can do that by using gas to some degree if it replaces coal or replaces oil. Why? Because gas is 50% less polluting. So for a period of time, if you're using gas in place of coal, that's a gain. That's a reduction in emissions. But after you reach 2030 or somewhere in that vicinity, in order to get to net zero by 2050, you must be reducing the emissions from the gas.
U.S. climate envoy speaking there with Bloomberg's Haslinda Amin in Hanoi. Now, the global fuel shortage also having a pronounced effect in Europe. Hours after G7 leaders agreed to implement a price cap on Russian oil, Gazprom reversed plans to resume gas flows through a Nord Stream pipeline. Now, a string of European politicians spoke with Bloomberg TV at the Ambrosetti Forum in Cernobbio, Italy this weekend about the ongoing crisis, and here's what they had to say.
I think it would be a challenge. Let's be very clear. It might take time. But explaining to all the 27 member states that if we want to be consistent with the policy of sanctions, there is a need to cap the oil price, seems to me to be the right direction.
We are convinced that next year, if this initiative will be effective gradually, the level of inflation could be reduced. I'm not saying it's going back to what it was 2 years ago, of course, but it will reach a peak and begin to decline possibly next year.
It's a great accomplishment. It's a good step. But now we need steps from the European Union. September the 9th will be a turning point, and the European Union has to react to the Putin's challenge, as we did 2 years ago on pandemic. And I think we succeeded 2 years ago. We have to succeed today too.
EU energy ministers are preparing for an emergency meeting on Friday where a number of special measures to rein in soaring prices will be discussed. Now, for more on all of this, we're joined by our Will Kennedy, our senior executive editor for energy and commodities. Well, we wake up, this morning, and it's kind of, it's a nightmare, really. It's worst case scenario. Have we planned for it? So can we cushion the blow in Europe?
Well, I think that it's a clear escalation of the crisis. Yeah. It makes things more severe, and you can see that in the market reaction. As late as Friday, people had expected limited flows to resume through Nord Stream, and clearly at the last minute they didn't. And I think it's going to make the winter tougher. We won't be able to fill gas storage as quickly as we'd hoped, and gas prices are higher. So yes, there's a clear escalation in this energy struggle we're seeing between Russia and the West, which involves both this action on Nord Stream and the oil price cap that was being discussed there.
Well, this is a picture that Gazprom released of the alleged oil leak. It kind of makes you cry, but also laugh, because it's just a little bit ridiculous. Do we just assume, and I think we're going to get the picture out in just a couple of seconds, do we just assume that this doesn't go back online, right?
I think so.
What is that even?
There seems to be a bit of oil just leaking out of a group of
What's
wires.
My energy counter? They've taken this.
It's almost like Gazprom's trolling the world with that photo, to be honest with you. And more importantly, Siemens, the company that services these turbines that drive gas through the pipeline, said this is no reason to turn it off. So we can assume that this is gamesmanship, this is a political motive. And as this escalating energy battle happens, I don't think there's any reason to expect Russia to turn this pipeline back on. I think that Europe's going to have to live without it. And attention will now turn to the final route in which Russia gas is getting into Europe, which is through Ukraine. And I think people will start to worry about whether that's going to be under threat.
Yeah, and our Valerie Teitel also put this, wonderful chart together looking at gas flows, which is, very telling. And I guess it's, for utility companies, is this a good or a bad thing?
Well, it depends. Depends if you've got any gas. For people who are short of gas, who have agreements to sell gas to their customers, this is a very bad thing. And I think there's a lot of nervousness in financial markets about what the impact might be here. We saw Nordic countries inject huge amounts of liquidity into their power market over their weekend, because I think there is a real concern about what the financial ramifications of some of what we're seeing in markets may be, and that Europe's trying to get ready for potential outcomes.
Well, so do we assume that actually a lot of these utility companies will have to be bailed out, across Europe and also in the UK, because it's either customers, because of inflation, not being able to pay for the bills, or it's actually some of these companies not having, the gas to supply?
When this all plays out, one thing I think we know for certain is that governments are going to be much, much, much more involved in Europe's energy
much
markets.
poorer.
Yeah, I mean, a lot of it will come onto state balance sheets, clearly. I think we're probably likely to say that in the UK from the new Prime Minister today, is that they will cap prices somehow and then take some of the costs onto their balance sheet. But what's being discussed in Europe, we had this story over the weekend that they're going to discuss radical interventions in energy markets, perhaps suspending some derivatives markets, perhaps capping some prices in markets when they meet on Friday. We're going to have a much more state-controlled energy market in Europe. And yes, that will have an expense for taxpayers, but it may take some of the sting out of the problem immediately for businesses and consumers in the region. That's the hope.
All right. Well, thank you so much. Will Kennedy there, our Senior Executive Editor for Energy and Commodities. Now, coming up, China's zero-COVID policy continues to hamper growth, with lockdowns extended over 21 million people in the Chengdu province. We'll have more on that shortly. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. The results of the contest to succeed Boris Johnson as Prime Minister will be announced today, with the winner taking over after a meeting with the Queen tomorrow. Foreign Secretary Liz Truss is the odds-on favourite to win and will come into office facing a brutal economic storm. China has extended its lockdowns for most of Chengdu's 21 million residents, with all indoor entertainment venues, schools and dine-in restaurants remaining closed. All of the country's 31 mainland provinces recorded at least one local COVID case over the past 10 days, reflecting the broadest outbreak since at least February 2021, when disclosures first started. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thank you so much. European stocks slumping, the euro falling today. It's all about energy, the energy crisis with Russia intensifying. Of course, this worsening energy crisis is adding to risks for a global economy already facing high inflation, but also a wave of monetary tightening. We'll have plenty more on the markets and on UK politics. This is Bloomberg.